It's definitely a very quiet day for the markets. There's really nothing happening at this point in time. The Bank Nifty is just about holding its head above the water, up around 0.2%. A lot of specific stocks are in focus, and one such stock is Biocon, which released its numbers late last evening. It's an interesting mixed set of numbers because the revenue did well. It was up 26% on a year-on-year basis, but the margins came down to around 20.3% versus expectations of around 21.5%, and that was because of higher R&D expenditure. Profit also was lower because of a higher tax outflow. Now, interestingly, what stood out in this quarter's numbers was that they are looking to close the Viatris deal, where they're looking to buy the global biosimilar business. It is expected to conclude soon. And for the equity component, Biocon has raised $150 million from Serum. So Serum will eventually hold around 12% stake. A couple of triggers going forward would be possibly looking to, replace the mezzanine funding of over $400 million, which Biocon is also doing in order to complete the acquisition of Viatris. But in fact, I did catch up with Kiran Mazumdar. Let's listen in to what she had to say on the company.
We are at a very crucial stage of the Viatris acquisition. And I think the way we're looking at it is that we would like to close the deal ASAP, since we've got the necessary regulatory permissions to go ahead with this deal. So the first thing we are focusing on is really about closing this transaction, which will involve a payment of $2 billion and of course $1 billion worth of stock to Viatris. Now, in order to fund the $2 billion that are payable to Viatris on closing the deal, we have basically addressed this, and we have shared this in public domain, that we would do this through an $800 million equity raise and a $1.2 billion debt financing. Now, we've put in place the $1.2 billion debt, we've arranged for that, and the $800 million is coming through a combination of mezzanine financing as well as equity investment, which you just alluded to, which includes $150 million coming from basically Serum, and the remaining $650 million coming from Biocon. Biocon itself is putting in $230 million through its own reserves, which included the Syngene stake sale of $150 million. And the balance will actually come through mezzanine financing, which also will then be basically funded through equity and other means to basically make good this mezzanine financing. So I think all in all, we are in a good shape. This will basically take, on a diluted basis, Serum is expected to get around close to 12% of a stake in Biocon Biologics. Biocon itself will have a 68% stake at the end of this round. And as you know, Viatris has a 12.9% minimum stake in Biocon Biologics.
It's over $400 million of mezzanine financing. What is the collateral? And when you say that it will probably be replaced by PE investors, what is the timeline of replacement? Are you already in talks? And will a possible further stake sale in Syngene be on the cards?
Well, certainly we are looking at all avenues. Of course, there is a huge amount of interest from PE investors in Biocon Biologics. We will be looking at even possible further stake sale in Syngene if that is required. But all in all, I think we're looking at various options to basically take care of the mezzanine financing and beyond. We are not averse to reducing debt even further. And there is a huge amount of PE interest in Biocon Biologics, because I think this is a unique stock which is very well positioned for high growth. And as you know, the Biocon Biologics business, once you combine it with Viatris and the Serum Institute Alliance, is a very attractive and uniquely differentiated business with few parallels.
Sure. Viatris, one of the key concerns, in fact, has been that the guidance has probably been a little below expectations, or the ability to meet their guidance. They've guided for around $875 million in CY22, and currently they've done over $500 million or thereabout. So is there a fear that this guidance in terms of revenue probably might not be met, and there could be a possible negotiation on the valuations of the deal?
Let me put it into the right context. Ekta, if you recall, this quarter they have actually delivered $185 million of sales for this quarter, which is sort of basically tracking close to the $800 million kind of levels. They have been impacted by the euro depreciation. Otherwise, they could have been over $200 million this quarter. But having said that, I think we are very confident looking at the way the numbers are tracking, that next fiscal, which is where they've guided to sort of $1 billion top line and roughly 200 plus EBITDA, I think is absolutely doable, which is what we are really focused on, and which is how the valuation of the deal was basically drawn up. So I don't think we have concerns around that because the numbers are tracking in the right direction. I think Glargine itself is showing a very strong uptick. New prescriptions are tracking at around 14% market share. The current market share of Glargine biosimilar Glargine is in the 12% market share range. So I think all in all, we are quite confident that there might have been a sort of a quarter catch up, but I think it's all tracking in the right direction.
Sure.
We're seeing a lot of companies signing up for Glargine, and I think overall we are very confident that given that we've got Glargine, trastuzumab picking up, pegfilgrastim picking up, and crossing the 10% market share mark, I think all augurs well for us as we move into this year.
Can you tell us the latest with regards to insulin aspart? You have received a complete response letter from the US FDA, and separately the update with regards to the US FDA inspection on your Bangalore site as well as your Malaysia facility.
So basically, Ekta, if I may put it into the right context, I think the CRL alludes to the addressing the inspection 483s, which we have through a CAPA. I think the CAPA needs to be reviewed. The agency has asked us to basically seek a meeting with them so that they basically tell us exactly what they require for approval. So we believe that once we have this meeting, we will have much greater clarity in the timelines of aspart approval. As far as bevacizumab is concerned, we still haven't heard from the agency in terms of the approval of bevacizumab. The Bangalore site inspection for bevacizumab did not throw up any major observations. And so we believe that we should have approval for both bevacizumab in the near term, and aspart we hope will happen expeditiously as well. But we don't want to comment on these two till we really understand from FDA what they are seeking.
Okay, in terms of margins, you had R&D expenditure which rose quite significantly year on year. You did margins on a blended basis of around 20-odd%. It was impacted by a higher amount of R&D costs. What are you guiding for in the second half?
Obviously it will normalize to the 12 to 15% levels once we combine the businesses. So I don't want to really, comment on the kind of guidance as yet. But suffice to say that at this point in time, yes, it is at 18% of BBL revenues. And you can see that we've had a huge uptick in R&D spends. But that also augurs well for the pipeline because, as you know, these two assets, ustekinumab and denosumab, which is what is accounting for this strong surge in R&D spend, has also been licensed in Japan to Yoshindo, which he just declared. And I think this is something that tells you about how good these two assets are for the business.
All right, that's the word coming.